Welcome, welcome, welcome. What's going on, guys? Wanted to shoot this quick video because I've been getting a lot of messages about how to enter in the market. So I want to cut this video for you guys, just going over how to basically get better entries in the Forex market. So let's get right to it. And this should help you guys a lot. All right, guys. So I've been getting asked this a lot. And I know a lot of you guys out there are struggling with this. And, for those who are in IML, who attend my sessions, a lot of times I'm just giving you the overall outlook, right? I'm just kind of, telling you where price is going to go for that specific currency. Like this is heading on an uptrend, downtrend, wait for this, wait for that. But I never get into like the technicals of trading per se, like how to get that precise entry or where to precisely place your stop loss. And I said I'm going to get back doing more videos on YouTube, dropping more content. So today was one of my days off. I decided, let me get some of this. Right now be the perfect time to go over some of these things. All right, so entries. All right, now this is what you want to do when you're trading. All right, it doesn't matter what you're trading, it doesn't matter what market, whether you're trading indices, whether you're trading commodities, crypto, forex, stocks, whatever. Right, at the end of the day, it's a chart. It's all about your knowledge on how this moves, how this operates, and depending on your knowledge on how well you understand the market will determine your success rate. All right, now when it comes to entries, because entries is critical, right? Entries is critical depending on your situation. Yes, it is important to have good entries. If you're off by, X amount of pips, depending on what you're shooting for and depending on your capital, right? I know some traders, they really don't care for entries. They know long term, this is going to go up. So even if they got in somewhere around here, they're fine. They can, they have the account size to handle a 100 pip drawdown, even a 200 pip drawdown. While there's others who don't have that capital size and they need precision entries, right? So this is how you get good entries. All right. Now, right before the market takes off, there's usually a high and low. Always a high and low. And I'm going to show you guys a few examples on what I mean. All right. Now, I'm looking at the Great Britain USD pair because this week I'm expecting some very big moves. If we go on forexfactory.com, the market has been kind of slow. A lot of pairs in consolidation, a lot of pairs in consolidation. So, no real movements over the last couple weeks. But this week, I'm expecting some big movements. I'm expecting some big movements. We got, starting literally Monday, we got New Zealand news. We got a lot of JPY news. I think we got, what was that? We got more New Zealand news on Tuesday. Got a lot of heavy news, right? On Wednesday, it starts to pick up. We have FOMC on Wednesday, right? That's going to determine the US dollar. And then on Thursday, we got all this Great Britain news. So, a lot of action. And then we also have NFP. So a lot of action this coming week, all right? A lot of action. So this is a great opportunity for you to make money, all right? So with that being said, entries, all right? So now, this is what you want to do. You want to look at the overall direction of what price is doing, right? So overall, what do we have here? Great Britain USD. So we got this uptrend. Well, we had this uptrend. As you can see, price broke, put a resistance line there. And now it's creating this descending wedge, right? This descending channel here. Now, anybody familiar with this pattern knows eventually this is going to reverse and shoot up to the upside, right? So how do we get good entries, right? So for example, currently price is right here. So let's go to the 4-hour. So do you want to enter a buy right here if you know price is going to come, let's say, all the way to like 136? No, that is not a good entry. This is not a good entry for a buy. Your buy, look at this. All right, guys, this is what you have to pay attention to. And this is what I mean by before price takes off, there's always a pattern that's created right before the takeoff. And you have to understand this pattern. All right. So this is a pattern right here that's happening. All right. So if I'm looking for a buy, check this out. Right. Swing low to swing high, swing low to swing high, swing low to swing high. If I'm looking for a buy on this pair, I do not want to buy here. My swing low was from here. These were my buy areas. Right there. Right there. You had one right there. You have one right there. And for argument's sake, let's say once the market opens, this doesn't shoot up and it comes back down. You want to buy down here. This is where you want to buy for the uptrend, right? And this is the problem with so many traders. They buy in the middle of a trend and they get caught up. You don't want to buy in the middle of the trend, right? Like the saying goes, you want to buy low, you want to sell high. So even if I was to sell during this channel here, right, even though this is a very choppy market, I want to sell up here. Right? Look at that. Great selling opportunities. You have to understand, every time you sell in between here, you're risking the possibility, especially if you know overall this is going to reverse, the possibility of this reversing and shooting up. You are taking a risk. You want to buy as low as possible. You want to sell as high as possible. So now, for example, once price got back up to this top, right? Once it hit this low and then came all the way back up to the top. Now, what I like to do is I like to look at the smaller time frames, right? Preferably 1 hour, 15 minute, if you really want that tight entry. Now, what I do is I wait, right? I have one indicator that I use, which is the RSI. And I wait till price gets into overbought territory. You see how price got overbought here? Look how it lines up right here, right? That means anywhere in this region, I'm good for a sell. I'm good. This is overbought because eventually, look, price has to come back down, right? Price has to come back down. Just like once price is oversold, price has to come back up, right? Price has to come back up. So when price reaches these main areas where I'm looking to buy and sell, I'm watching the smaller time frames and I'm waiting for price to get into the overbought, oversold territory. See right here, again, you're taking a risk. So anybody who follows me, as you know, we're looking for an impulse. Right now we're getting a correction. Price could reverse and go back up, but this, we're actually looking like we're getting a head and shoulder pattern here. So we could get one more drop down here. And if that happens, this is where you want to buy, in this region right here. That is where you want to buy. Notice, and I'm going to point something out. Notice, even every time price came to these lows, after price set the initial low here, came out, and then as you can see, it was creating this descending wedge, descending channel to reverse and go back up. Notice, even if you would have originally bought back in June of 20th, right here, right? Notice how it lines up where current price is. Notice that. That means this is a safe area. Even though price dropped, let's say when price came back over here and then it finally made that drop, eventually, as you can see, when it popped back up, you would have still been in profit, right? Now, I'm not saying you want a big drawdown of that magnitude. Let's see, price, you would have been about 146 pip drawdown. Nobody wants to be in 146 pip drawdown. But like I said, if you notice, look how when price came back up, if you would have kept that same position, you'd be over 100 pips. Notice when it came back down and hit the bottom of this channel, again, same situation, right? Let's get my measuring stick, right? So price came up about 270 pips and then dropped all the way back down, and you would have been about 90 pips, maybe 100 pips. But then boom, again, up again over 200 plus pips. Mind you, the breakout hasn't happened yet. I'm expecting this to break out. Eventually, this will break out. This is a reversal channel right here. This is going to break out. Absolutely. I'll show you a bunch of examples. That's what this pattern does. It's going to reverse. It's going to break out. And I believe it will happen this week. So if we get that one more move to the downside here, it's going to line up exactly where all the buy areas where you really need it to be. All right. Let me show you another example. Euro USD. Now, Euro USD. You notice, and this is a prime example right here. Prime example. See? Like I said, the market has been in a big consolidation. Like price, especially a lot of the Euro pairs, big consolidation. Notice what happened over here. Price was in consolidation before we had the breakout, right? Look how long price consolidated for. Price consolidated from January. It didn't break out until April. That's a long time. Price just bouncing up and down, up and down, up and down. Right? So over the last several weeks, you have to have a mass amount of patience, a lot of patience to ride this out, because all this is doing is just jumping back and forth in this channel right here. So boom, price came down, finally hit a low, and then what did it do? Came up, came down, came up, and it hasn't come down yet. I think we might see one more down move, and then boom, explosion, right? Breakout coming soon. So during times like this, you want to buy here. You want to sell here as high as possible. Sell here. You want to buy as low here. So the times price never came down here, guess what? I'm not in a buy. I'm not in nothing. I'm leaving it alone. Because like I said, perfect. For the person who bought right here, guess what happened? Boom, price dropped, right? They're freaking out. Again, you want to get in the best position as possible when you're trading, right? The best. So in this case scenario, the best position would have been buy low here, sell high here. Not buy here, you know, sell here. Yeah, you made some money right here, but again, overall, look what happened. Look at the type of drawdown you would have been in, right? This is the type of movement that agitates a lot of people when they're trading, right? All this back and forth shooting up and down, up and down. So if I'm going to be in the middle of a consolidation like this, whether I'm in a buy or a sell, I want to be at buying as low as possible. I want to be selling as high as possible. Another one. This was a recent pair that we took. That's right here. We took this sell a couple weeks ago. Remember this clearly. We took the sell, EuroCAD, a couple weeks ago, right? I said we had our impulse. This was our flag. And now last week we finally got the big drop, right? If I'm not mistaken, we sold around here. And I remember a lot of people freaking out because price came back up here. You have to understand something about patterns. They're going to do whatever they're going to do inside while it's correcting, while it's, making these, situations here. But eventually, like I always say, the move comes. You see, the move comes. I remember a lot of people when we sold right here, a lot of people were panicking. A lot of people panicking because this reversed and came back up so aggressive. And then it dropped and then it came back up. And then a lot of people got antsy. And then guess what? You got your big drop. Notice in that channel right here in this flag. So that was your impulse. That was your impulse. And this was your flag. In this case scenario, because we're looking for a sell, because this was the drop, right? So we were expecting this. You're looking to sell as high as possible, right? From this point, from this point, from this point, from this point. The problem is with most traders, they feel once they miss their entry point, they go chasing. So you know where they start entering the market? They start entering the market here. They start entering the market here. They start entering the market here, here, and then they get scared when that happens. They freak out when that happens, right? And look at this is the 4-hour time frame. So each candlestick is 4 hours. So anxiety kicks in. Patience, right, wears down. And then you get stomped out of the trade. You don't know what to do. You get agitated. You either, you're over leveraged, you quit, or whatever. You give up on the trade. And then, like I said, eventually, boom, the drop happens and you missed it. A lot of reason why traders lose money outside of bad risk management, right? Without, also not being able to understand how the market moves is patience, discipline, right? If I missed, per se, my entry, price came up here, we sold around here. So let's say I missed my entry over here. I'm not getting in again until I see a big breakout out of this channel. So a big breakout and then some type of correction, right? So we should get a correction next week on this pair, something like that. If price is still consolidating, let it move until it returns to the top, right? When it gets back up there, as you can see, boom. Your entry was here. Your entry was here. As far as your stop loss, be the previous high. If that's too high for you, obviously go to a smaller time frame, right? And find the next previous high, right? So the next previous high would be right here, right? Give you enough wiggle room, right? So like I said, always before every single breakout, there's a pattern. This was a pattern being created. So if you were looking for a sell, you should have been selling here, up here, not in between. And if you missed the move, understand you missed the move. Don't go chasing after the move. Don't go chasing. Another example, 2J trade we took, right? Like I always said, there's always patterns created. We took a sell on this trade around here, right? Price came up, set that high, came down. If I didn't catch the initial high here, I'm catching it next time it retests there. Always understand, wherever the high and low is set, price will always usually revisit that area to either set a new high or a new low. So that's your entry. So as you can see, when price came up here, this was the high. Then it set a new high, just a little bit above it. And then what happened? You finally got your drop, your aggressive drop, right? So same thing. You have a pattern being created right now, right? Price is dropping up, down, up. So if I'm looking for my sells is around here. Right? Not here. That's what a lot of you guys do. You see, and this is why I always say, you wait for a flag. You guys see this dropping, so you go chasing. So you had so many traders sell here. And look what happens. Look at your RSI, your indicator, or whatever it is that you use for confirmation. You really want to sell when this is oversold. You really want to sell when price has already been oversold. You want to sell when it's overbought. See how this lines up to the overbought territory? That is your area to sell. That is your confirmation. Even this pattern right here, before price continued going up, right? Price kept going up, scaling up, scaling up, scaling up, scaling up. Again, you're buying as low as possible. As low as possible. I always tell people, even when you think price has gone, it's taken off, and it'll never reach that low or that high again, think again. Think again. Come down here, retest, create that channel right before the low. These are the areas you want to buy. And look how it lines exactly up with my RSI. Look how that lines up with my RSI. That's where you want to buy. Analysis on Great Britain, New Zealand. Price is dropping, right? Breaking out. So you got that impulse, you got that correction. This is the biggest thing. This is where I feel a lot of traders struggle on, the flag formation, the correction, right? This part. People are always asking, when do I sell or when do I buy, right? So if I'm looking for a sell and I see prices creating this pattern, you're selling at the top here. Right? And you see, right before price takes off, that's the thing. The market actually talks to you. It will tell you what it's about to do if you take the time to read it and understand it. If you take the time to read and understand, the market will tell you what it's about to do. So it's telling you, after a couple of times, it's telling you, listen, if you're looking to sell, this is where you want to sell. But so many of you guys get caught up in sells down here, right? And then you get caught in that big drawdown. Then, like I said, anxiety kicks in, panic kicks in. You start worrying so much. Eventually, anybody who had sells in here, all right, you're good. You got out of it, right? This is coming down. But what if this reversed? So for those who had sells up here, they had the tightest stop loss. right above there, right above that high. While people who sold right here, the stop losses, instead of it being a 40 pip stop loss, their stop loss end up being over 100 pip stop loss. Right before you buy or sell, there's always 9 out of 10, there's always a pattern. Always a pattern. And in that pattern, there's a high and low. See? This is the low, that's the high. This is the low, that's the high. This is the low, that's the high. Right? Came close to the low, that's the high. There's always a pattern right before takeoff. You have to understand that pattern. Euro odd. Another pair. Look at this. Another pair that's in big consolidation. Price been consolidating. If we're looking for a sell on this, don't you want to sell at the top here? That is where you want to sell. It amazes me how many people sell at the low here. And you know how I know people sell at the low here? Because the market reverses. You see these wicks? These are people who got stuck selling down here. That was where you're supposed to sell. Like I said, this is a pattern being created. The market will never take off without creating some type of pattern, letting you know what it's about to do, right? Before price dropped, the market created a pattern. Look at that. Ascending channel, right? Ascending channel. So every time price hits the high, I'm looking to sell. And these patterns work, guys. Somebody, I don't know if you guys heard the news, Facebook, right? Took a big blow this week. Huge. Let's look at Facebook. Facebook Inc. Look at that. Go on the weekly here. Look at that. Guys, what is this right here? What is this right here? How many times have you seen me go over this pattern? What is that? Boom. So if you've been watching this, anybody who's really been watching this pair, this stock, you would have known to short this. You would have known a big short is coming. Every time price got at the top of this channel, you would have known the short. You would have known the short. And if you shorted on Friday this week, you made a hell of a lot of money. Where did we see that recently? What pair? Euro Swiss franc. Right? Where do we see that? Euro Swiss franc. Look at that. Remember that? And what happened? Boom. Every time price got at the top of the channel, that was your indication to sell. There is always a pattern created right before the market takes off. If you can understand that pattern and you can find the highs and lows in between that pattern, your entries will be 10 times better, right? Like this consolidation pattern right before market dropped. Right before that big drop, what do we have? Price came up, price came down, came up, came down, came up, and then finally dropped. So if I'm looking for a sell, I'm trying to sell as high as here as possible. Right? Price just missed it, but boom. So the moral of the story is find the pattern that's being created right before, whether you're looking for a buy, looking for a sell, there's always a type of pattern. And within that pattern, whether it's consolidating, creating a flag, there's always a high and low. So depending on what you're looking for, if I'm looking for a sell, I'm trying to sell as high as possible. That's why I showed you all these examples, right? So I'm looking for a buy on GU coming up, right? So I'm looking to buy here, here, here. If price happens to take off, perfect. You know what I do? Again, I wait for my breakout, wait for my correction. In that correction, there's going to be a high and low. Inside of that correction, inside of that flag, a high and low. Just like I showed you on Great Britain, New Zealand. Right? Just like Great Britain, New Zealand, just like this flag, right? Impulse, there's going to be a high and low. So in this case, I'm trying to sell as high as possible. In Great Britain USD's case, I'm trying to buy as low as possible. So once this flag is created, I'm trying to buy as low as possible. Right? So that is a way you can get better entries when you're trading. All right, identifying the pattern that is being created. Let it form. As you guys can see, look at this. Look how long it took for this to form. Some of you guys, again, a lot of times with trading, it's all about being patient. You have to let the patterns form. Most of you guys, I'll get a lot of questions. Well, how do I know when the flag is done? We'll know when it's done once it's done creating its pattern, right? When it's done creating a pattern. You guys think after a blowout, after a strong move to the upside or downside, you think one candlestick in this direction, and then that's the pattern. No, right? Again, look how long it took for this pattern to be created. Weeks, right? So you have to give it time, depending on what time frame you're trading on, right? So this is the daily. So I'm not saying every pattern is going to take this long. The higher the time frame, the longer the wait. But you will find patterns in every single time frame, right? So for this time frame right here, you had that impulse, you had this flag right here. So if I go on the 15-minute, again, you have your highs and lows. And then drop. So I'm selling up here. And notice price is pretty much near overbought territory. Then I get my move to the downside. Wait for the pattern to be created. Find a high and low within that pattern before buying and selling. Line it up with whatever indicator that you use, RSI, MACD, whichever, stochastic. Then take your trade. As always, when you enter, your stop loss should be above or below the previous high or low. All right. So I just wanted to shoot this quick video, go over exactly how to get better entries, guys. Right. Again, one last example. You see price came up, pulled back. This wasn't exactly a nice flag, pulled up again. And notice, look at this flag that it created. And notice the high and low that it created. See that? See that? See that? And then what happened? Take off. So that means if I'm looking for a buy, I was supposed to be buying here, here, here. That means after I buy here, my stop loss is below previous low there. And then that's my move. All right, guys. So I hope that clears up a lot of, questions and message about how to enter the market better. Hopefully you find value in this video. Please like it, please share it, comment below, tell me what you think, and I'll see you guys next time.